Welcome back. Today we're talking about Hedera and the state of HBAR. In 2025, is this coin a good investment? And what we're going to be doing is we're going to be going through this research report from Masari Crypto and understand a little bit more about the current state of HBAR, kind of recapping some of the metrics and some of the successes and maybe challenges that they had last year in 2024, and see how it stands up to 2025 and this cycle and the narrative cycle. We're also going to be going through some dashboards and understanding the actual network activity on the Hedera ecosystem. I know Hedera is a hash graph, blockchain, whatever. We're just going to be calling it blockchain for ease and continuance of kind of this whole networking ecosystem. And by the way, if you're not already a subscriber on the channel, we cover almost everything having to do with crypto and finance on this channel. Make sure you guys are subscribed. Give the video a thumbs up because HBAR cryptocurrency is not free, but thumbs up are always free. All right, so let's understand a little bit more about Hedera. So Hedera's website says real-world asset tokenization for everything. Hedera enables seamless tokenization of real-world and digital assets at scale, offering unmatched performance, security, and compliance for thriving tokenized ecosystems. You can see over 8 million mainnet accounts have been created, over 70 billion total transactions on the mainnet. 413,000 transactions in the last 24 hours, 3 seconds to finality. The average cost is, hundredth of a penny. And so let's understand a little bit more about Hedera and where they are in terms of performance, in terms of overall network activity today. Hedera, or HBAR, is a high-performance, secure, and sustainable public permissioned distributed ledger technology network. Hedera is governed by a council of up to 39 of the world's leading institutions with community input from the network's features and ecosystem standards via Hedera Improvement Proposals, or HIPs. While anyone can submit a transaction and view the network history and data, only pre-approved entities run the nodes that validate transactions and participate in consensus. Members of the council operate Hedera's validator nodes, while the network has public plans to transition to fully permissionless node operation over time. Although Hedera's network operations is currently permissioned in nature, the division of responsibility across the 30 geographical industry diverse collusion-proof council members is unique among public networks. So many of these networks out here in blockchain, they have decentralized networks. So independent node operators or large companies that are validating the network, right? A lot of times we see some big players like Google or Amazon joining on and also validating the network. And I think a lot of that is also so that they can go and test the network, and they're a validator so they know that everything is good and no major issues are being presented there, right? But what we see here with HBAR is they do things a little bit different. They have the Hedera Council, which is about 40 different companies around the globe that run these validator nodes. This is, I would say, an enhanced level of security from a permission network. Now, in my view, most of the blockchains out here are permissioned in some level or way, right? Because you have to be able to upgrade the network. And so somebody has to approve that, or a combination of many people. And so having companies running the network, this will give trust, in my view, to a lot of companies who are not trusting of this new technology, of like a public network that everybody can access. How is that going to secure our company's data? That's how I would imagine a lot of people think about this. And so having 30 or 40 companies as the validator nodes and making sure running the security for the network, this is very different than we see in most other ecosystems. And I think could be a positive, obviously not for the decentralization maximalists, but companies don't want full 100% decentralization, right? They just don't. They don't trust it. They don't want it. And I would imagine compliance wouldn't allow it either. Anyway, the Hedera network offers an optimized version of the BSU, Ethereum virtual machine for smart contracts, called the Hedera Smart Contract Service, alongside a native tokenization service called the Hedera Token Service, and a high-throughput data writing and verification service called the Hedera Consensus Service. These services that we just discussed are known as the Hedera Network Services, which developers can use in a permissionless fashion to build decentralized applications in a variety of programming languages. The hash graph consensus algorithm powers the network, delivering high throughput, fair ordering, and low latency consensus for all transactions. And if you're up to this point in the video, make sure you guys are subscribed and also give the video a free thumbs up if you want to help support the channel or are a huge Hedera fan and want to show your support. You can leave a super chat down below in the comments or click the join button right down below to learn more about becoming a channel member right here on the Cryptoviser podcast we upload quite often. Anyway, you can see that the change from the end of 2023 to the end of 2024, the Hedera market cap tripled basically from $2.9 billion to $10.3 billion. But this is important to also understand. The circulating supply of Hedera increased by 5 billion coins from 33.4 billion in 2023 to 38.3 billion in 2024. That's a big number, right? Because 5 billion of 30 is 1/6. So 1/6 is basically like 15%. Yeah, about 15%. So that means that the inflation rate from in 1 year was 15%. That's a lot. That's a lot. Now, I don't know all of the network dynamics. That's not what we're going through in this video. This video is for very high level understanding of the network and kind of looking at an analysis, right? This is how I analyze these networks. When I'm looking at, do I invest? Do I not invest? It's a multi-week process because I'm looking at all the data. I'm looking at and saying, wait, it increased in 1 year by 5 billion coins. Dogecoin does that. Why is Hedera doing that? Where are these coins coming from? Where are they emitting from? What is that inflation rate going to look like in the future? Because remember, although the market cap has increased, also has the circulating supply. If the circulating supply stayed the same, just based on supply demand calculations, the market cap, if the market cap was the same, the price would be much higher because you didn't have the actual inflation. But anyway, you can see revenue has also decreased substantially from Q4 of 2023, $1.6 million, and pretty much over $1 million every quarter since. But in Q4 of 2024, it dropped to $239,000. So that's a 84% drop year over year. That's a big number, big number. But let's understand the network activity because this is the most important thing in my view. Average daily transactions in 2023 was showing 163 million transactions on a daily basis. What you can see is it kind of wavered through 2024 and basically stayed above 100 million transactions a day, except it had a 99% decrease from the year before, from 163 million to 563,000. That's a big drop. I don't know, maybe this has to do with they got the data, it's not accurate. I don't know. That's a big drop. Big drop in revenue and a big drop in daily transactions. And if you look at the daily active addresses, this kind of tells you how many people are using the network daily or how many wallets are. We went in 2023 from 6.6 thousand to 10,000 a year later. So think about that, right? Market cap is higher, circulating supply is higher, active daily addresses is higher. But meanwhile, revenue and transactions are down. Now, this could just be due to the fact that a lot of the focus has been on Solana, the AI cryptos, the ETF cryptos, and this does not include Hedera. But it is also important to keep in mind some of the negative metrics to understand and dig a little bit deeper, right? So maybe after this video, you go and research why the revenue had dropped so significantly on Hedera. Or maybe that's something I would do as well. Now, we can see the revenue is again, this is HBAR circulating market cap increased 375% quarter over quarter to $10.3 billion. Now, a lot of this was due to the Trump pump, right? As we say, as we call it, the right after the election, the speculation that crypto was going to be, golden after Trump said he was going to be the Bitcoin president. And some of that has corrected, but we're still much higher. I mean, right now when I'm recording this video, the market cap is still 7.16 billion, which would be basically 3x what it was in 2023. Continuing on, they talk a little bit more about the market cap, and they talk about the price increases. Not going to get all through that. Revenue fell. This was following a decrease in transactions, but it wasn't just a decrease. Look at this. This was a significant decrease in transactions and revenue. Like, why did that happen? And it happened kind of in line with when that Trump pump occurred. Hedera's network revenue generated from the network fees hit a yearly low of 2.1 million HBAR. Revenue decreased 92% quarter over quarter following a decrease in transactions. The decrease in Hedera's network revenue can be attributed to a significant decrease in the Hedera consensus service transactions discussed in the network overview. So this is the network overview. The daily average number of new accounts declined in Q4, down 10% quarter over quarter. However, active accounts on the Hedera network saw a 24% increase, like we just talked about. It says transactions fell in Q4 by 99%, following a 99% decrease in Hedera's consensus service transactions. Overall, average daily transactions fell from 153 million to 563,000. Transaction activity is now more evenly distributed across the Hedera network services, with the Q4 percentage share of average daily transactions broken down by the following. This decline in Hedera's consensus service transactions can largely be attributed to Avery Dennison's Atma platform ceasing use of the Hedera consensus service. Messari has previously reported that they represented the majority of transactions on Hedera. That is really interesting. That this Atma.io, let's see what Atma.io is, stopped using Hedera's service. I think they have an announcement, so let's click it. Atma, the world leading connected product cloud, a platform that unlocks the power of connected products by assigning unique digital IDs, or those are NFTs, to everyday items, providing unparalleled end-to-end transparency by tracking, storing, and managing all events associated with each individual product from source to consumer and beyond to enable circularity. So this is very interesting. This is very similar to what VeChain does in terms of tracking from, farm to table effectively. And so what is the update? This is from the Hedera help desk. They don't have dark mode. It's so bright. It's so bright. Anyway, it says, has Atma.io concluded its use of the Hedera consensus service? It says, yeah, a connected product cloud has ceased using Hedera network service. Avery Dennison will continue to serve on the Hedera Council, providing strategic guidance on the Hedera network codebase and governance, and Avery Dennison's professional ties with Hedera remain strong. So I guess there were concerns when they stopped using Hedera Consensus Network. Again, this is kind of like the rabbit hole that you end up going down to understand what is the Hedera Consensus service? Why did they stop using it? Why was Atma so many transactions and now there's no transactions? Like, was Hedera, or I should say, should Hedera be even at this market cap if one product was all those transactions? And why did they stop using the network for those transactions, right? You got to dig a little bit deeper. What we're doing on this video is very high level. Does this look like a good investment, or does this look like a bad investment? What else do I need to dig a little bit deeper to understand why these transactions fell? And not only the transactions fell, but how the Hedera ecosystem is going to increase these transactions and the revenue. Because if there's no revenue, there's no there's no incentive to validate the network. But then you could say that these large companies, they don't care about the revenue. They're just trying to create their own network that is secure and that they can use. So again, right, digging a little bit deeper, understanding what else is going on. Average daily active contracts grew 26% to 200. And so, yeah, this is basically the report. They have a layer zero integration. That happened in October of 2024. This aimed to enhance the network's interoperability and strengthen its position as an enterprise-grade platform for institutional DeFi. All right, so now we have to dig a little bit deeper. Like, what does the DeFi look like? And so if you go to DeFi Llama, you can see Hedera has $98 million of coins locked up. Now, when you're comparing this to the rest of crypto, it's relatively low. I mean, Solana, Polygon, Base, Ethereum, these all have billions and billions of dollars locked in the protocol. And Hedera only has 98 million. But let's understand how this looked like if we zoom out, and you can see that what chart is, I think this is a 1-year chart. Yeah, it goes back to 2022, and what you can see is all increasing, right? We've had dips here and there in DeFi, but pretty much DeFi, or the value of the DeFi locked, has been increasing. Now, if we switch this to see how much HBAR is actually in the DeFi ecosystem to weed out any price fluctuations in the underlying cost, you can see that we're basically at multi-year lows dating back to 2023. And so it does look like it's kind of moving up now, but we would have to monitor this a little bit more. I mean, I don't know that DeFi data means that much when we're talking about, is this an investable asset? But when I take all of the data combined, right, everything that we've gone over so far on the Hedera network, and again, there is a lot. I mean, I could spend an hour on Hedera just kind of talking about, maybe you guys want to see an hour video on Hedera. If you do, let me know down below. And by the way, when you're down there, also give the video a free thumbs up. So yeah, I mean, I could spend an hour on Hedera and go through every single data point. But what we're looking at is we're trying to accumulate all of the data into one piece, right? So although daily transactions have decreased substantially, and normally I would say this is probably a very negative thing for the network, we now know that one product was the majority of those transactions anyway, and that's not a sustainable metric to look at regardless. And now that they're no longer using the Hedera consensus service, those transactions have decreased. Now, one metric or one data point alone can't really make your investment thesis, right? You have to use multiple data points. And so when I take that data point and I say, okay, let's just forget about daily transactions because that one product was the majority of them. Where are the rest of the metrics? Well, everything else has improved. We have more market cap. There's been a lot of inflation, but that doesn't seem to matter when we're talking about the market cap, the price of the coin, the activity and daily active addresses, which are higher. Pretty much everything on the network is higher than it was the previous year. And again, we're using Q4 of 2024 data, so it's 1 quarter delayed from when I'm recording this video. But generally speaking, all the metrics are moving in the positive direction, except for that one. We also can see that there is a lot of network activity and it's continuing to increase. You can see from 2022, this is the transactions over time. Nice steady increase in transactions through 2023, 2024. You can see network fees. We covered this. They've decreased. A lot of that was because of that one product's not or no longer using the Hedera service. This chart shows you the number of accounts, active accounts, and you can see that it's been fairly stable in the 300,000 to 400,000 range. In March, it was at 286,000. In February, it was at 295,000. So fairly consistent numbers here, at least from what I'm looking at. Now, if we pull up another data dashboard, this is the hash point research on Hedera's network. At least I think that's what it is. But yeah, you can see here that transactions per second is Basically 5 to 10 transactions per second. Now, a lot of people will say that this is fairly low. Let's pull up the 90-day chart and see what that looks like. Yeah, it's basically under 10 transactions per second. But basically, guys, most of these major blockchains, they cannot do thousands and thousands of transactions per second. Solana can, Internet Computer can, but most of the other legacy blockchains, they can't. We can see transactions by service. This is what we were talking about before. Entities created. We're talking about that before. Created accounts. You can see a significant, just steady increase in the number of accounts on the HBAR network. You can see the distribution of wealth by account segments. So you have, whales, mega whales, large, medium, small, micro, and nano. So there's a lot of data to look at, and pretty much all the data that I can see here is that the metrics on Hedera's network are improving, obviously, besides the transactions. If we look at the entire ecosystem of Hedera, you can actually see that they have so many products already built, right? They have Web3 ecosystem applications, EVM compatibility, hardware wallets, non custodial wallets, tokenizations of assets, banking, wildlife conservation, delivery as a service, NFT hubs, karate combat, MetaMask. I mean, they have a lot of different applications you can see here, and it just keeps going on and on. Enterprise applications, this is on a higher level, right? BitGo, leading digital asset platform, IO Builders, AidTech, Aberdeen, ArchAx, ServiceNow, a lot of different products that are building within the Hedera ecosystem. LG, sustainable NFT marketplace to buy and sell digital artwork, and so on and so forth. And they have wallet custody, network explorers, tooling and integrations with the Pith network, Chainlink, Elliptic, MetaMask, Wallet Connect, HashDAO, Hashgraph. I mean, you guys can see all of this. Very high level integrations, very interoperable. And so, listen, I mean, I don't necessarily want a corporate chain, corporate crypto, but I mean, the metrics look really good on this asset. Now, obviously, we would have to do a lot more digging and research into, you know, really where the network activity is, what's building on HBAR. Is HBAR capable of, increasing 10x from here, to $1.70? 10x would be $71 billion. Is Hedera's HBAR worth that much? Is the network worth that much? I mean, there is a lot built on it. And so this is, kind of the process that I do to analyze these cryptos, analyze these assets, analyze these investments. Are these good investments? And based on what we just talked about, just in this video, yeah, I mean, I would definitely want to do more research on this ecosystem. I mean, it seems like they have a lot built out. Obviously, corporations are backing it and validating for it, so they're probably putting money in it as well. Real world tokenization, data integrity and AI, decentralized ID, DeFi, payments, sustainability, consumer engagement, decentralized logs, NFTs. There's so much here. And so, from a strictly performance and ecosystem and network activity perspective, I would say that this is probably, like, if you're talking like red, don't invest, yellow, maybe invest, and green, definitely invest. I'm probably between yellow and green, right? I think that it seems like a secure network. It seems like there's a lot of activity and a lot of building going on, a lot of money being pumped into the ecosystem. It seems like they have enough of, you know, stability on the network and in the prices and in the DeFi and in the network usage, minus that one company that was using a lot of their throughput. And just understanding, like, if companies start building more into this highly interoperable ecosystem, this can go much, much higher. But it's already, in my view, kind of in the higher end range of these cryptos, right? It's number 18. Some other cryptos that I talk about are much lower market cap and have more potential to really move higher this cycle, like Internet Computer, Polygon. These are highly interoperable, a lot building on it, enterprise grade. very similar to HBAR, but HBAR already has a much higher valuation with less transaction activity. And so that's kind of what's keeping me from going straight to green. Is yes, it's a good investment. It's a little bit of caution because typically when network activity drops for whatever reason, it doesn't matter it's one company using all that transaction activity or not. If the transaction activity lessens significantly from hundreds of millions to just hundreds of thousands, it's really not a good sign. And typically the rest of the metrics in the market will reflect that, including the market cap. And so that's what keeping me in a little bit of a cautionary tale with this coin. But overall, I think from a technical perspective, Hedera HBAR has it, and the ecosystem seems to be very, very well built and thriving. And so let me know what you guys think. Let me know if you agree with me on my assessment from green to yellow, kind of in the middle there, on a buy versus caution. Let me know down below in the comments. While you're down there, don't forget to give the video a thumbs up, and I'll see you when I see you. Invest responsibly, and as always, crypto on.